What if I told you some of the most powerful real estate investment strategies that we use today were already being used over 2000 years ago by the Romans, long before the modern banks, Airbnbs, the Zillow listings? The Romans were quietly building wealth through land, property management, and rentals. And here's the crazy part. Their habits still work today. In this video, I'll break down the real estate investment habits of the wealthy Romans and how you can apply them to build long-term wealth in today's market. Hey everyone, if you don't know me or are new to my channel, my name is Vikram Chopra. I'm an investment banker turned broker in the Greater Charlotte metropolitan area where I live and invest, and I help other investors with their financial goals. If you're serious about building wealth through real estate, you need more than just tactics. You need timeless principles. And no civilization mastered long-term wealth building quite like the Romans. Look around me. All of this belonged to the wealthy Romans at some point of time in the past. Number one, they focused on land ownership first. The Romans had a simple belief: land equals power. If you look at the wealthy Romans, senators, generals, the elites, their wealth was not cash or gold. It was land conquered around the world in North Africa and other places. Vast estates called latifundia. These weren't just homes, they were income-producing assets. Farm, vineyards, olive groves, colosseums, all generating consistent cash flow. Tickets to get in. In modern day, we call these stadiums. In Charlotte, we have the Bank of America Stadium, home of the Panthers. Here's the lesson. The Romans didn't chase quick wins. They accumulated assets that produced value over time. So what's the modern day takeaway? Stop chasing flashy deals. Focus on acquiring solid income producing properties, especially those tied to essential needs like housing. Number two, they built for cash flow, not speculations. The Romans were smart. They wouldn't build these structures just for flipping. The Romans didn't flip properties hoping for appreciation. No, they were obsessed with income. Take, for example, insulae. These were ancient housing built in Rome for the people, for the masses. The wealthy Romans would build out many of these insulae and then rent them out to the working class, to the peasants, to the blue-collar worker in the modern days that we call. Sounds familiar? They understood something absolutely critical. Cash flow provides stability. Appreciation is just a bonus. The modern day takeaway: if your investment only works if the prices go up, then that's speculations. The Romans wouldn't do it. If it works today and puts money in your pocket, then that's smart investing, just like the Romans. Number three, the location was everything to the Romans. Just like today, the Romans were masters of location strategy. They invested heavily in properties near ports, military routes, city centers, trade routes. I am currently in Antalya, Turkey. Anything that had to be transported from Asia to any part of the Roman Empire went through here in Turkey. Turkey is one of the only 5 countries in the world that spans Asia and Europe. So what did the Romans do? They put a toll booth here. Just like today, Iran is trying to put a toll booth on the Strait of Hormuz. Any tanker that tries to go through the state has to pay a toll to the Iranians. The Romans were similarly thinking like that. The concept of easy pass back at home came from the Romans, just like putting a toll here. And it's not just in Antalya. Go to North Africa. You'll find Roman investments all around the coast of the Mediterranean Sea. But why? Because that's where economic activity happened all the time. They even built infrastructure. They built roads, aqueducts, marketplaces, all because they wanted to increase the property value. Let that sink in. They didn't just pick good locations, they created them. So what's the modern day takeaway? I'll tell you, follow growth. Look for areas with job expansion, population growth, infrastructure development. Real estate success is often just being early in the right location. By the way, if you're a beginner or an investor and are looking for guidance on how to get started in real estate investing, feel free to book a 20-minute free call with me. Link below in the description. We can go over the numbers together and come up with an actionable plan. The Romans are gone, but I am still around to help you if you need one. Number 4, the Romans diversified the real estate portfolio. The Romans didn't just put all their wealth into only one type of property. No, a wealthy Roman investor might just hold urban rental apartments, agricultural land, vacation villas, commercial storefronts. Why? I know, risk management. If one sector struggled, others could carry on the portfolio. And yes, there were struggles, just like we have them today. Back then, medicine wasn't developed like how it is developed today. So when a disease like the plague wiped out half of the population, at least the other nerve centers would make money. What's a modern day takeaway? Simple. Don't rely on one single strategy. Mix it up. Long-term rental, short-term rental, multifamily, possibly even land. Diversification isn't just for stocks, it's essential in real estate as well. Number 5, they use property management systems. Here's something most people don't know. The Romans had property managers just like we have them today. The Romans had large estates all over the world, in North Africa, in Asia, in Europe. How can a wealthy Roman manage all of that across continents, across seas? Large estates were often run by overseers who managed all day-to-day activities like rent collection, tenant relationship, operations, maintenance, everything in between. The wealthy Romans didn't fix toilets or change tenants. No, they built systems that did all of that for them. For example, in Antalya over here, the mayor would be a property manager reporting to a wealthy Roman back in Rome. Just like how we have lunches with our property managers once every 6 months, I'm sure the wealthy Roman would come here and bring gifts for the mayors. So what's a modern day takeaway? If you want to scale, you want to stop being the operator and start being the owner, just like the wealthy Roman did. Whether it's property managers or systems or automation, your time should be focused on acquiring assets and not managing every detail. Number 6, they leveraged other people's labor. Romans understood leverage better than most modern-day investors. Their estates were powered by labor, workers who produced goods and maintained their property. Now, while the historical context is very different from today, the principle still applies. They didn't do anything by themselves. In modern days, we have amigos that do everything for us. They help us out with our day-to-day operations. So what's a modern-day takeaway? Leverage today looks like more like hiring property managers, working with contractors, using agents in teams. Your goal, just like the wealthy Roman, is not to do more work, it's try to control more assets, own more assets. That's why if you're planning to invest money in real estate, go ahead and book that 20-minute free phone call with me. Link in the description below. We can look at your deal together. Number 7, they thought in generations, not years. 2000 years ago, you still have the Roman ruins all around the world. Whenever they were designing this, the Romans were not thinking about for the next 5 years. They're building this for their children and then the children's children. The Romans perished, but all this still stayed. Real estate was passed down through generations, creating long-term family wealth. This is one of the biggest mindset shift that you have to make, my investor friend. Look at the Vanderbilts, the Rockefellers, the Trumps in the US. They're all building wealth so that their names can live on for thousands of years, just like these Roman names around here, Julius Caesar's. Elon Musk is willing to go to Mars to have his name etched in history. So what's the modern day takeaway? Stop asking, how much can I make this year? Start asking, what will this portfolio look like in 20, 30 years? Real estate is a long game. Number 8, they understood the power of urbanization. As cities like Rome grew, so did the demand for housing. The Romans capitalized on urbanization by building dense housing, those insulates we talked about earlier. They saw the trend earlier and scaled into it. I can tell you Charlotte is growing. Currently, Charlotte is a tier 2 city, but by 2050, Charlotte is going to be a tier 1 city. The prices are still manageable, but not for very long. So if you need some guidance, go ahead and book that 20-minute free phone call with me. Link in the description below. So what's a modern day takeaway? Pay attention to demographic trends. Where are the people moving? Where is the demand increasing? Where are the opportunities? That's where opportunity lives for investors like us, you and me. Number 9, Romans were experts in managing risk aggressively. Roman investors were cautious, the wealthy ones. They avoided overextending themselves and often invested in tangible, essential assets. Like this bathhouse behind me. You need to take a shower. The amigos need to take a shower. The poor people of Rome needed to take a shower. And so they built that. Even the building design reflects risk awareness. Sure, some insulas were poorly built, but the best investors prioritize durability and stability. So what's the modern day takeaway? Don't over-leverage. Don't chase deals that barely work. Build margin into every investment. Number 10, the Romans knew when to exit. The Romans were not emotional about their investments. If political or economic conditions changed, they adjusted. Queen Cleopatra, the last queen of Egypt, is a perfect example. When Cleopatra died, the Romans knew that the political conditions have changed in Egypt. Political winds had changed directions. The Romans sold, reallocated, and shifted focus. When the region became unstable, they de-invested. Same what we do at home today. When a place becomes uninvestable, we move out of the market. I used to buy condos in Alexandria, Virginia, but it had become so expensive that none of the investment properties now would cash flow. So what do? You move on to a different market, just like the Romans left Egypt and moved on to Tunisia and Morocco. So what's our modern day takeaway? Have an exit strategy. Whether it is selling, refinancing, repositioning, anything, every deal should have a plan on the back end. So what can we learn from the Romans? They didn't have modern tools, but they had timeless principles. Own income-producing land. Focus on cash flow. Choose the right locations, like Turkey. Diversify, build systems, think long-term. Go marry Cleopatra if that's necessary. If you apply a few of these principles today, you're already ahead of most investors. You have questions, doubt, concerns? Go ahead and book that 20-minute free call with me. Link in the description below. If you found this valuable, make sure to go ahead and give me a thumbs up. Like and subscribe for more real estate investing strategies that have stood the test of time. Drop a comment below. What one Roman habit will you start using in your real estate journey? So until next time, this is Vikram signing off from an ex-Roman territory. Good luck, goodbye, and go earn your freedom by using the timeless strategies that even the Romans used.